Welcome to Trading Nation. I'm Eric Chemi. Bitcoin blasting past the $19,000 level on Tuesday, building on its 2020 gains as buyers pile into the crypto trade. With the likes of PayPal, Square, and Fidelity now stepping into the crypto market, the bulls are out for Bitcoin, now nearing its all-time highs from 3 years ago, December 2017. Today, we are joined by Todd Gordon of TradingAnalysis.com and Mark Tepper of Strategic Wealth Partners. Todd, if folks think the Dow at 30,000 is impressive, wait till they hear your Bitcoin target. What do you see coming up?
Hey, Eric. Yeah, this is unbelievable here. In order to value and put some kind of target on Bitcoin, you have to bring out the super geeky technicals, if you don't mind. But viewers in the Trading Nation, the show that we're on, I think can handle it. And it's hard to give Bitcoin an intrinsic fundamental value because there's pretty much a finite supply. It's more portable than gold, and it can be stored and carried around on a chip. So I have to go to Elliott Wave, and it's sort of a esoteric, complicated way to look at the market, but it's a wonderful way to value crypto because Elliott Wave is meant to detect like the herding mentality and the emotions driving the price, fear and greed, and it creates very recognizable patterns. Like just before I get in, I've been trading crypto. I bought my first Bitcoin at like $220. Like I've made for me a lot of money trading it. It's a great technical market. So to get into the heavy lifting, the Elliott Wave theory is based on the idea that there's five waves in a primary trend, 3 trends and 2 intervening corrections. So I can see from 2014 there was the first wave up. Then in 2000, like 15 up to 18, that's your middle wave, your wave 3. Then the last 2 years was in wave 4, sort of a sideways triangle. A lot of people lost interest. Now we're moving higher, Eric, in wave 5. So the point of all this is a reliable relationship in the Elliott Wave theory is the percent distance traveled in that first wave in 2014 is often equal to the percent change in wave 5. Wave 1 was 650%. So another 650% rally. In this current rally right now, I can't believe I'm going to go out on CNBC and say this, but it's about 74,000. Now, if it wants to fall short,
74,000. Hold on, everyone sit down. Everybody sit down here.
I'm already sitting down. But and then again, the Elliott Wave goes very well with this Fibonacci multiples. If it does want to fall short, it can go to 61% of that target, which is only at 34,000, Eric.
Oh, that's much more reasonable. All right, 34,000 we can handle. I mean, it sounds like we're buying expensive cars here all of a sudden now. Bitcoin getting out of hand. We're going to bring Mark in here. That's a lot to process. What's your take on some of the huge numbers that we just heard just now?
I'll tell you, Eric, I can't comment on Fibonacci and Elliott Wave, so I'll tell you what I'm experiencing firsthand. Look, I've had friends and clients asking about Bitcoin for years now. My take has always been it's speculative. But at the same point in time, I've always had to own some. It's like a FOMO concept for me, right? If I never owned any and Bitcoin hits 100,000 per coin, I'd probably cry myself to sleep every night for the rest of my life if I didn't own some, right? So I've also told clients that the amount I own would not change my life if Bitcoin for some reason would go to 0. Now, I'm not saying that's going to happen, but at the same point in time, if it's a speculative investment, you want to make sure that it wouldn't change your life if it goes the wrong way. All of that for me suddenly changed on October 21st. I was looking through my text messages this morning, and on that day, I told a new client that PayPal just added crypto. It was time to double down. And since then, you've seen Bitcoin go from like 12,000 to 19,000 in like the last 30 days. And the thing that's always held me back from being an outright Bitcoin bull has really been this lack of widespread adoption. But now you have PayPal and Square. You mentioned Fidelity. There's Robinhood. These guys are all entering the crypto game. So adoption's happening, and those users, those PayPal and Square users, they're buying more Bitcoin than what's actually hitting the market on a daily basis. So it's all supply and demand. Eric, you can kind of compare this to Tesla, right? I mean, Tesla's up over 500% this year. In my opinion, I got to go with Todd here. I think Bitcoin could potentially be the Tesla of 2021. It could, in my most bullish case possible, get to 100K by the end of next year. That'd be my bull case. I think my base case is a little closer to it doubling up to about 40K by the end of 2021.
Wait, so your numbers are even higher than Todd. So he was giving us like 75, maybe 35. You're giving us even more. I'll go back to Todd. You mentioned you first got in back in the 200s, which at the time seemed crazy. Did you sell any of that? I mean, it's been very volatile. How long have you been holding these 200s for?
I still have it, and I'm proud to say my dad still has half of what I got him into. And what Mark said.
And Todd's a billionaire now.
Yeah, right. I mean, by the way, this is my last show on CBC. I'm just kidding. Not even close. Look, the back when it was 200 or 1,000 or even 5,000, the percent moves that you were seeing were so large. Mark hit the nail on the head where you have to have small allocation. It was interesting in the early days of this, you would see so much money be made with such a little percent of your portfolio. I think that still largely holds true. Because now we're talking about, from 20,000 to 40,000. Okay, it's 100%. Not as big percent moves, but they're certainly very large. So I think it's important, and for my longer term clients as well, Mark, I think is saying the same thing. Have a small percent allocation if you don't want to trade and be in and out. Certainly have a small amount, and that small percent allocation can make a big difference in your portfolio if we are going to go higher. But as Mark said, if it goes to zero, none of us are going to lose too much sleep over it.
But then I'll end with Mark. So people, let's say they're watching now, like, you know what, maybe I should have gotten in. I've missed this thing. Should they be chasing this thing now? But if you guys are throwing out numbers like 35, 40, 75, 100 grand, maybe 19's not that expensive, but clearly historically 19 is as much as it's ever been. So what do you tell somebody that's like, am I chasing this right now? I don't want to be down 50% in a month.
So it's funny, I was talking with a client this morning, and he was asking me about all the different cryptos. I mean, some of them are up just way more than Bitcoin. But what I've been telling people who feel like maybe they're getting in a little too late is you kind of got to leg in. So dollar cost averaging, always resorting back to that very simple strategy of investing, tends to work well. It hedges your risk a little bit. Maybe you buy a little bit every week, maybe you buy a little bit every month, but there are certainly ways for you to kind of leg into it. And like I said, like Todd said, I think the key is really you need to figure out what allocation you're comfortable with. I think for most people, you probably want to keep it at or below 5%, right? And certainly if your 5% of your portfolio turns into 10% because the thing doubles, yeah, it's definitely helped you out quite a bit. But you got to figure out how much you're comfortable holding. And I would be an advocate of kind of legging into it periodically over the course of, a few weeks, few months. I think that's the best way to build your position.
Yeah, no, I think the FOMO thing is going to get a lot of people. We're looking at that chart right now. I mean, you're in single-digit thousands clearly the whole year. So anybody had that opportunity to get in there and make that double this year. But do people have the stomach for it? We're going to find out as we approach 2021. Bitcoin, always interesting, always volatile. Todd and Mark, thank you both for joining me today. We could have kept going. We just don't have all day. We don't have all day, but thank you for watching Trading Nation.
It was fun.
I'm Eric Chemi. We'll see you next time.